Well, the numbers are in, and Indonesia's economic growth has exceeded expectations. In the second quarter of this year, Indonesia's economy grew by 5.44%. Well, Indonesia's second quarter growth was higher than first quarter growth of 5.01%. It was driven by growth in the transport and storage sector, food and beverage sector, and also the processing industry sector. Indonesia's economic growth beat Bloomberg analyst survey estimates, which projected 5.17%. It even beat Indonesian Central Bank, Bank Indonesia's estimates of a 5.05% growth. Meanwhile, Indonesia's second quarter GDP growth exceeded those of the US, Eurozone, and neighbors like China and Hong Kong. In fact, the US saw 2 consecutive quarters of contraction, as did Hong Kong, while Indonesia's GDP maintained continuous higher growth this year so far. Amongst its neighbors, Vietnam's economy saw higher growth than Indonesia. Well, indeed, Indonesia continued to maintain positive growth so far this year. Second quarter growth at 5.44%, which, as I mentioned, exceeded expectations. Now, to talk more about Indonesia's booming growth, I'm joined by the Executive Director of the Center of Reform on Economics, or CORE Indonesia, Muhammad Faisal. Hi, Faisal. Thank you so much for joining us this afternoon.
Hi. You're welcome. Thank you for having me.
All right, thank you so much for joining us. And this is very good news. Indonesia's GDP growth in the second quarter, higher than estimates, and performing better than some of the neighbors, and of course also better than the US, Hong Kong, and even China. So just talk to us about how did Indonesia manage to sustain economic growth in a sort of global economic condition that is very gloomy at the moment, and as we can see, the US is contracting. So how did Indonesia beat that, Faisal?
Yeah, as we have predicted before the release from BPS, actually there are 3 factors that contributed to the relatively high economic growth in the second quarter, which is the first is the consumer spending, and then the second is net exports, and the third is investments. For consumer spending, it is in particular, it is actually a little bit higher than we have predicted before. We predicted actually about 5%, but apparently it's more than 5%. It's about 5.5%, which means that the domestic demand in the second quarter is actually a little stronger than we have predicted, and it has something to do with the increased mobilization of people following more or less after the pandemic, especially Omicron in the first quarter. So the demand is increasing domestically, regardless of the slowdown in the external or global economy. And the second one is the net surplus, which is more or less driven by the commodity prices. And as we have seen in the second quarter, our trade surplus is the highest compared to historically, compared to last year's. And then the third is actually of course the investments. Although the investments growth is not as strong as we have predicted, it is less stronger compared to consumer spending and also net exports. So these are the 3. So it means that domestic economy is strong, and then also supported by external factors. Even though the external factors is more driven by the price rather than the volume because of the slowdown of the external economy.
Right. So does that mean that Indonesia's economy is quite resistant against these many global or external challenges like higher energy prices, higher oil prices? So I suppose the government is doing a good job, or is it just because Indonesia is very resistant to it?
Well, we can say that indeed that Indonesian economy is relatively more resilient compared to the peers, because as you mentioned before in the statistics that other countries, even the developed countries, they experience the slowdown economy or even recessions in America, for example. But we also have to take notice that there's still an external factors that contributed to an increase in the GDP growth in the second quarter, especially as I said that the net exports, the trade surplus is mainly driven by the price. And but if you look at the volume, actually the volume of our exports is actually contracting or declining compared to the similar period last year. So it's more of the price. And then with regards to the domestic spending, especially consumer spending, yes, it is actually exceeds our expectations in the second quarter. But if we look at the inflations, this is actually the challenge ahead, because inflations can, can weaken the strength of consumer spending in the following quarters. And it has been indicated, if you look at the growth of the manufacturing sector in the second quarter, quarter by quarter, if we look at the growth is only 0.04% compared to the previous quarter, compared to the first quarter. It is much slower than the growth of manufacturing in the first quarter, which is 0.75%. So the current inflation has been experienced, especially by the producers. So producers' price index is actually higher, a lot higher than consumer price index. As we know that consumer price index, the inflation that we know has achieved about 4.74% until today. Now, if we later see that the producer price index will be transmitted into the consumer price index in the following quarters, so it has the potential, to weaken the consumer spending in the following quarters. So these are the things that we have to take notes, with regards to the GDP growth in the second quarter and also in the following quarters.
Right. So, are you estimating that perhaps the impact of inflation, especially especially on production, the impact of inflation on production, is this something that's going to be felt in the coming quarters? Is this something that Indonesia has not felt yet?
Yes.
Is that quite a big risk for Indonesia?
Yes, that's true. And another one, aside from inflation, there is also another potential, sort of threat from external, which is the fear of global recessions, and it has impacted on the global price of commodities. If we have seen right now, oil prices has reached just below $100 a barrel, which is much lower than in the previous months. It has exceeded 120 something dollars. We see in May, for example. So there has been a declining prices. And if we look at the prices of palm oil, it has also been declining in the past 1 month. So the fear of a weakening demand following a fear of the global recessions has also been seen until today. We have entered the third quarter now. So in the third quarter and also in the fourth quarter, I think it is very likely that the commodity prices will be declining, maybe not very fast, maybe a little bit slower, but then it will impact on our trade surplus. So our trade surplus in the following quarters may not be as high as that in the second quarter. And secondly, also our revenues, our government revenues, which is, there has been a windfall on government revenues in the first semester. And in the second semester, towards the end of this year, I think the windfall is not as high anymore.
Okay, but let's turn back to the second quarter again. Previously, you were talking about the manufacturing sector. Just talk to us about the contribution of Indonesia's manufacturing sector to growth in the second quarter, particularly.
Yeah, the growth, the distribution, the share of manufacturing sector, as we know, is about almost 20% to the global to the total GDP. And now, if we look at the growth in the second quarter, it's only, as I said, only 0.04%, which is very low, compared to, not only compared to the first quarter, also compared to the previous year. So this is an indication that the manufacturing sector has seen some pressure, especially the pressure in terms of the prices for raw materials and also energy, and probably also the logistic cost. And if we look at also the PMI, the manufacturing index, it also has been declining. It is still above 50%, which means still expansion, but the expansion is still has been weaker compared to the previous months. So this is the thing that I think in the following months and also in the following quarters, the burden from the producers will be transmitted to the consumers in the form of an increased finished products. So that means there will be an increased inflation on the consumer side.
All right. So just lastly, we've run out of time, but talk to us about your projections. Maybe I know now we've seen continuous growth in the first quarter, 5.01, the second quarter, 5.44% growth. Are you seeing a slowdown in growth in the third quarter, Faisal?
Yeah, it is very likely that there'll be a slightly slowing down in the third and fourth quarter. But I believe that up to the end of the 2022, our economic growth is still a bit, a bit stronger in the range between 4.5 to 5%.
All right. So still growth this year, despite a slowdown, you're still predicting positive growth this year. Okay.
Yeah, it's still reasonably strong growth.
Still reasonably strong growth, especially in this current global economic dire conditions. There's still some very positive signs coming from Indonesia. Well, Pak Muhammad Faisal, Executive Director of the Center of Reform on Economics, or CORE Indonesia, thanks so much for giving us your insights today.